Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's talk about what in the hell is happening with this stock lately. And yeah, let's just discuss all that as per usual. So if you enjoyed the video, don't forget to hit that like button. As it'll help a lot. This is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live for just $3 a month where I share intraday thoughts, updates, etc. on Tesla throughout the day as it's moving and trading. But jumping, right into it, Tesla down once again, surprise to anyone. 3% on the day, which as expected, I'm not as expected, but unsurprisingly at this point, honestly, another red day for Tesla compared to the market itself, which, was either flat or even slightly green. I mean, QU up 0.2%, SPY down 0.05%. Obviously, today's CPI numbers came in 2 basis points, I believe it was, higher than expected on the inflation reading, right? I think it was expected to be 3.3, came in at 3.5, or it was expected to be 3.2, came in at 3.4. One of those. But nonetheless, it came in hotter than expected. That's the point, right? And the markets initially, actually pre-market, rose up on the news and then kind of faded throughout the day. But Tesla faded much sooner on the news of the fact that Hertz apparently selling their Tesla cars at a cheap price. Who knows why that is people are coming to conclusions, obviously, naturally, but there's also news about Tesla's Berlin factory now being shut down for a couple of weeks or so pretty soon. So a lot of bad news rolling in for Tesla, and apparently they're increasing, also news, I'm not sure how accurate it is, that they're increasing the pay of their workers, which is technically a good thing, but obviously financially it's not really a good thing because that's less money coming over to the bottom line, right? So a lot of news, essentially, let's just say, around Tesla, but looking at strictly just technical analysis, there's obviously a few things to pay attention to. So there's obviously, as usual, there's good news and there's bad news. So let's start off this time with the bad news, right? Last time we started off with the good news, maybe this time we'll start off with the bad news. So we lost the 200-day moving average today, right? The 200-day moving average pretty much came up to it this morning as we gapped down below it, came up, pretty much tested it, and then got rejected and then moved down even lower. Now, again, it's only one candle. One candle doesn't make a trend, but obviously showing some signs of rejection here at the 200-day moving average. Tomorrow we have PPI coming out. Could be another pretty important day for the market. Hopefully, fingers crossed, that is what can help us over here for Tesla, because man, it really needs some help here. So that's not good, right? We're obviously losing a lot of moving averages. We're below the 100. I believe we're below the 100 as well. Yeah, we're below the 100, below the 200 EMA, below the 50-day moving average, below the 200 now as well. So at the very least, I'd want to recapture 200 ideally tomorrow, if not very early next week. Otherwise, if we constantly keep going back up into the 200-day moving average and just constantly getting rejected and just not really showing signs of getting back above it, it's not ideal. Now, again, with that being said, let's also take a look at the overall picture in the sense that the 200-day moving average, as important as it is, don't get me wrong, I'm not trying to downplay it whatsoever. There's been many times where we fall below it and then go down below it a little bit, then come back up, dance around and go below it again, and then suddenly we rocket right above it and we continue rallying. So just take that into account, that just because we cross down below it doesn't mean that it's all over, sell everything, it's bad, it's horrible, that's it, Tesla's done. Not necessarily, right? There's been many times in the past where the same would happen, and instead we would just essentially, go right back above it, go back below it, dance around it. Like, it doesn't just mean, oh, we close one candle below, that's it, Tesla's going down to $100 per share, right? Just keep that in mind. Obviously, it's not good, and obviously it's better to be above it than below it, but just, keep that in mind. One candle or even a couple candles don't make a trend. Now, with that being said, we are obviously still closing below it, right? We're obviously losing the little wedge that we had over here, which isn't great. So not amazing, right? The weekly is not looking substantially better. It's there's still potential here, but there's some good things to talk about and some bad things. The bad things is, of course, well, we're falling back into this bull flag right now. That's not really what I wanted to see. We still have one more day on the weekly, of course, but we'd have to pretty much rally back above like 233, 234, roughly about 233, we'll say, to even potentially still come back out of this flag and actually end the weekly candle above the flag. So, will that happen? I have no idea, right? We'll need a sizable move tomorrow for that to happen. Never know with Tesla, obviously, right? That's not impossible, but, we would need a move of about, actually not even that sizable, only about, what is it, like 2 to 3% roughly tomorrow, which is actually not as much as I thought as of the close today, of course. So not impossible, but we'll see. Now, that's kind of the bad news, right? We're obviously, losing a lot of moving averages and whatnot, and the weekly is not looking the best in the entire world. Not the worst, but not the best, right? So take that into account, right? That's not great. The MACD is still bearish, right? The RSI is starting to enter oversold territory. So we'll see. Now, the good news is the fact that, well, okay, so we ended up obviously breaking this little wedge that we had over here, and then we fell down below. But now we entered what is supposed to be a pretty strong area of demand. Now, the reaction here wasn't as strong as I would have expected, or I would have liked rather, because as you can see, these two candles back here, when we fell down into this range, well, they had a pretty substantial reaction, both of them. This time we fell back into that exact same range, and I was hoping for a reaction like this. Obviously, that's not the case. We still got a bit of a bounce, right? We ended up gap filling pretty much this gap right here, arguably at about almost 224. So that's good news, right? We did fill that gap pretty much, which is good. But, we're still trading within this supposed area of demand. So hopefully that actually ends up being the case over here. There's a lot to talk about. I'm not even sure what I want to go to next, but the next thing to talk about is this, right? So I'm gonna go ahead and remove all these moving averages for now because it's just kind of cluttered, and we already talked about them. We already know what to expect, which actually there'll be more to talk about them on the weekly once I get there, but I want to finish up on the daily here. So stochastic obviously still on the daily, even pretty much oversold near the lows, right? Again, every time we get this to anywhere near this low, doesn't mean you have to bounce literally tomorrow, but usually, we get a pretty strong bounce from here, at least to some extent, right? So just keep that in mind. Every time the stochastic has been this low, it has essentially found a bounce, relatively soon-ish, right? Again, could be tomorrow, could be next week, who knows? Just keep that in mind, right? But doesn't mean we can't go potentially even a little bit lower, which we'll talk about very soon as well. There's a lot to talk about. The Bollinger Bands that you can see over here, right? We're now once again hugging the red line. Every time we hug one of these lines, the green or the red, we always talk about how almost always we revert back to the mean, which of course is going to be the the white line right in between here, pretty much in between the red and the green lines, right? We always revert back to the mean. Question is, do we do it now or do we still go a bit lower? That's still the question, but we almost always eventually revert back to the mean, which in this case is somewhere around the 245-ish level. So keep that in mind as well. What else is there? I do want to talk about the options flow very quickly. So earlier today, there was a massive options flow, a put that is now gone. I believe it was, I have a sneeze coming up. Let me go ahead and move this here because that's where, excuse me, it is. But we had a 3.8 million premium, 233.3 put for January 19th. That was here pretty much the most of the day. It is now officially gone. And instead, what we have now is a 3.3 million premium call, 227.5 call expiring also the 19th of January. Pretty substantial. This is kind of the calls or the flow that I kind of look for, right? This is a substantial premium, 3.3 million. I'm hoping that this tracker that tracks options is able to distinguish between a sold and a bought option, because maybe this is a sold option. Maybe someone is selling these calls, which in this case is bearish. I assume it is able to differentiate between the two. Since it's a green circle, I assume it's a call buy. So that's important to see. I mean, it does say sweep over here if you look at it. So it's most likely a buy, which is good. That's good to see. That's pretty substantial. 3.3 million. That's a whale. So, that's nice to see. That's a little bit, gives you a little bit of hope there, if you will. So that's good to see there, right? What else is there to talk about? Let's see. So on the daily, or actually it'll look a little bit better on the weekly, but ultimately I want to see a bounce from this green box over here, right? Also on the daily, we have these green lines over here. So you can either do like this or I can draw it like this, right? It doesn't really matter. The point is that it ends up being the same, but the point is the fact that, we potentially are in this channel like this, right? That channel that looks something along the lines of this right here, where, we came back down here, ended up rallying back up, kind of dance around the top part of this channel for quite a long time, right? This is also this kind of ascending wedge that we were in potentially, but you can also look at it as a channel. It's all about perspective in this, right? But the reason I bring this up is because it respected this top line pretty substantially, and now we're respecting this general area, at least for now, so far, which happens to coincide with being essentially the exact same parallel line that was as a resistance here, is now acting as a potential support over here, and that's what essentially creates a channel. You have two pretty much the exact same lines, one at the top, one at the bottom, which is why these kind of tools exist that help you created this quickly, these kind of channels, and there we have it right there, right? So, and we're dancing right in between. Now, if I also go ahead and, okay, I'll remove the green lines for now. We'll instead put this channel back here like we just had, right? Which so far, again, lines up pretty well. Then we'll right click on it and we'll lock it, but we'll also put in the middle line. And you can see, we're middle line is actually kind of, relatively close. I don't have it drawn to absolute perfection, but the idea is the fact that the middle line also acted as a pretty decent area of contention, right? It was like kind of like that white line in the Bollinger Band where, it acted as a support here, but it was support here as we came roughly, pretty close to it, bounced off of the middle line quite some time and then acted as a bit of resistance here as we broke through it. So, this pretty much tells me that this is definitely a channel, right? And we're at the bottom of the channel right now. Now it could be a bearish channel. You never know. It's hard to say for sure, right? This could be just a bear flag channel right here. But the point is the fact that this would only be the fourth touch point, as we had a third touch point. We had a 1, 2, 3, potentially moving up for the fourth touch point, which again, I'm not saying it will happen, but in theory can potentially move us back up, even pretty high up to the 277s, which again, if that happens, I think that Tesla will just be overall bullish. I don't know if that'll actually happen, but at the very least, I would expect us to come back to about the 240s, maybe even 250s, to kind of go back to the mean, like the average part, essentially, if you will, of this channel, which is this center white line. Again, this is all assuming this even holds, right? For all we know, maybe tomorrow PPI would just break down below this once again, and things don't look as good anymore, and suddenly this channel is irrelevant. Obviously, that's a possibility, so take that into account. Now, let's go over to the weekly very quickly. There's a few things to talk about. So if we zoom out pretty aggressively here, right, you can obviously tell that, actually, let me do it on TradingView because I can actually draw here. I want to draw. So let me go ahead and, by the way, the, oops, what the hell is this? The, what's it called? So this is what I'm going to talk about soon, but the, what's it called? We're going to go back to the daily quickly here. The head and shoulders, the bearish head and shoulders, and the bullish one. The bullish one is gone, doesn't exist anymore, right? This, I mean, we potentially could be setting up the head here, I guess, but the one we talked about yesterday is nullified. However, with that being said, this potential bearish head and shoulders, in my opinion at least, is nullified. This, in my opinion, is hardly a shoulder, right? I mean, it's nowhere near what this shoulder was. This is hardly a shoulder. It's pretty scuffed looking head and shoulders pattern if you want to, you know, still consider it to be that, if you will. But because we broke down below what should have been the neckline, assuming we actually set up the right shoulder, to me, it has been nullified. So take that into account as well. Now, going back to the weekly on the TradingView, two things I want to talk about here. So first and foremost, a lot of people have been talking about this potential massive inverted head and shoulders, which is still in play. Don't get me wrong. Tesla's still in play for this massive inverted head and shoulders, which is great, right? But if we zoom in, we're potentially setting up a smaller inverted head and shoulders, which again are both bullish, which is going to be essentially what you see on your screens right here. We have the left shoulder pretty much right around over here that was dancing in between like 215, you know, 215, 220, maybe even as low as 210, right? Give or take 210 to 220, we'll say. Excuse me. Now we're pretty much coming down into that area once again. Now, the thing with these head and shoulders is that they don't have to be identical. The right shoulder doesn't have to come down exactly to where the left shoulder was. It absolutely can, but, you know, even if we, let's say, in theory, bounce from here, this would still be a pretty decent looking right shoulder, right? Probably go sideways for a little bit, maybe even start setting up a candle for next week that, you know, maybe a little sideways action into a bounce, who knows? But the point is the fact that we are potentially setting up what looks to be another inverted head and shoulders in here as well, which could be bullish as well. But as long as we go down, if we go down to about the mid-teens, like 215, give or take a few dollars, still valid in my eyes. That would also come down right exactly to where that 200-day moving average is, which is this yellow line right here. And that would act as a support on the weekly as well. So take that into account as well, because that is obviously, you know, pretty important to consider. We also have the 50-day moving average on the weekly that we did essentially bounce off of today, which is good to see. So far holding that as well. So we'll see if that actually ends up being, you know, something worthwhile or not. But there's a lot of mixed signals. Tesla is behaving very weirdly. It's behaving very annoyingly even as well. So, you know, take that, you know, for what it's worth. I am going to remove this actually because there's just too many lines here and it's kind of annoying. So I'm going to redraw. Actually, let me see. I'll worry about this later. I'll do it myself later. But the point is that you guys got that channel, right? The idea of this channel, again, something like this, right? And then you have, of course, similar line that looks something like this over here as well, right? So yeah, that's kind of the main idea I'm looking at right now, right? More, oops, yeah, there we go, more or less. So just take that into account, right? That's kind of the idea that I'm eyeballing right here, right now. So, you know, that's kind of where we're bouncing. I am just moving all over the place. Maybe I'll just do this once I'm done recording the video, so you guys aren't just watching me struggle here for no reason at all. I'll do this after. I already showed it. You guys know what to do. But with that being said, that's the main things I'm looking at. Again, the stochastic is oversold on the daily, or it's pretty much there. The RSI is pretty much there as well. The 4-hour oversold, stochastic also near the bottom, right? Same thing with the 65-minute chart, pretty much oversold in the RSI. Stochastic is also at the bottom. So there's a lot of oversold conditions being met right now. Tesla has been falling substantially. Usually when it falls this many days in a row, pretty much straight red, there is at least a respectable bounce on its way around the corner. I'm not saying it'll happen right now. I don't want to keep saying, oh, a bounce is coming, when it never comes. But the main thing I'll be looking at to really kind of get a better confirmation of the bounce is this on the 4-hour chart. Do we break above this green line or not? That will be the main thing I'll be looking for. At the moment, we'd want to pretty much be breaking above 230. Ideally, also recapture the 200-day moving average on the daily. And that will be the thing I'll be looking for tomorrow and hopeful for tomorrow as well. But with all that being said, that's a lot of information. It's a lot to talk about. Hopefully it made sense. It's a tough area. A lot of people are getting trapped here because Tesla is definitely behaving very, very unusually, especially relative to the market. The market has been pretty much kind of chilling, actually performing surprisingly pretty well, in all honesty, especially after today's CPI prints. Tesla has just been substantially underperforming in a very unusual way. There's something very strange going on with the stock that, I don't know, it's very, very weird. It feels like it's trying to get as many people to quote unquote paper hand, if you will, as possible before the next leg up, or at least some form of bounce. So we'll see if that ends up being the case. But with all that being said, thanks so much for watching. If you enjoyed, don't forget to hit that like button. And as per usual, I'll see you tomorrow. Peace.